Ethereum CCC ETH/USD price forecasts are heating up as the cryptocurrency continues to rise on Thursday. There are a few explanations for the recent surge in ETH prices. Hello folks, welcome back to the channel. In today's video, we will bring you the latest news about Ethereum. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. To begin with, the digital assets network was upgraded on Wednesday. This was done to cut down on the cryptocurrency's large transaction fees. The arrival of Coinbase Global, Nasdaq, Coin on the stock market is the second explanation for ETH's price rise. The world's largest cryptocurrency exchange went public yesterday, causing many cryptocurrencies to rise in value. Digital Coin's Ethereum outlook is positive, with the price expected to double by 2023. The average price is expected to be $2,922.64 in 2021, rising to $3,651.21 in 2022, $6,317.73 in 2025, and $9,163.19 in 2028, according to the forecast, writes CTOvision.com. A 36% upswing to $2,563 appears to be in play after ETH sliced through the upper trendline at $1,878 on March 31st. The breakout point is multiplied by the distance between the first pivot high and low to arrive at the goal, says Akash Giramath from FX Street. However, we cannot rule out a short-term pullback in the near term as some bulls start to take profits. It's time to buy up the rumor, sell the news game. ETH was up 5.1% as of Thursday morning, according to Crispus Nyaga of Investing Cube. The Coinbase IPO did more than just double the price of ETH tokens for the cryptocurrency. The first quarter of 2021 has officially finished, and Ethereum had an impressive quarter by most metrics. In terms of interest, the network's native cryptocurrency Ether, ETH plus 5.23%, outperformed Bitcoin, BTC 0.63%, and conventional macro assets by a broad margin, increasing 156% throughout the quarter. Several ETH investment products have also been published, paving the way for more institutional participation in the Ether markets. Several milestones in Ethereum's technology roadmap and the success of the Ethereum 2.0 update were also reached during the quarter. The overall value locked in Ethereum 2.0 more than doubled in the first quarter, increasing from 1.5 million ETH staked to 3.6 million by the end of the quarter. During the quarter, the number of active validators protecting the network increased in tandem with the number of users depositing Ether in 32 ETH increments. By February 27th, the number of active validators had surpassed 100,000, and by April 12th, it had surpassed 118,000. At the beginning of April, the cumulative value trapped in ETH 2.0 reached $8 billion in dollar terms, just as the price of ETH burst through the $2,000 per unit valuation in the markets. The ETH 2.0 network is now the fifth largest proof-of-stake network in terms of staked value. ETH 2.0 has evolved to be a significant competitor to other, more developed and long-running POS networks such as Tezos and Cardano in just 4 months. However, compared to other POS networks, ETH 2.0 has a significant advantage in that the vast majority of ETH supply is not used for staking. As of April 12th, only about 3% of Ether supply had been locked in ETH 2.0. As compared to other POS protocols which have nearly 80% of their coin supply staked, ETH 2.0 is by far the least common. Since the majority of new Ether is created on the Ethereum blockchain, which is guarded by miners and a proof-of-work consensus algorithm. Furthermore, Ethereum has a flourishing decentralized application (DApp) ecosystem, which competes with Ether's staking asset use case. Validators in other POS protocols rely heavily on native tokens to receive rewards on the network. Users, dApp developers, and more recently, institutional investors put Ether to work in a variety of ways for Ethereum and Ethereum 2.0. In Q1, a number of new use cases for Ether attracted the attention of wealthy investors and institutions. Ether is first on the list as a payment method for non-fungible tokens, NFTs. Buying NFTs with ETH has always been possible on Ethereum, and it has already gained some popular attention thanks to the game CryptoKitties, which was released in 2017. However, the recent excitement around digital collectibles, which peaked in the first quarter of this year, has reached new heights. Over the last 3 months, authors, musicians, athletes, companies, and even robots have provided digital art pieces on Ethereum. While the sheer number of people using this technology is impressive, what distinguishes this hysteria for NFTs from the 2017 CryptoKitties craze is the involvement and support of high-profile individuals and organizations. Christie's, one of the world's most prestigious auction houses, sold an NFT for $69 million on March 11th and received Ether as a payment. The Associated Press, based in New York, sold NFT artwork for $180,000 worth of Ether one day after the sale. Since December, the trading volume for NFTs has increased by more than 25 times. Apart from the increasing use of Ether as a payment method for NFTs, we also saw the start of what might become an industry trend, ETH as a corporate reserve asset. On March 7th, software firm Maitu reportedly purchased $22 million worth of cryptocurrency to carry on its corporate balance sheet. Galaxy Financial, a digital asset merchant bank, had only opened an Ethereum fund for institutional investors a few weeks before. By March, it had received $32 million from wealthy investors looking to gain exposure to ETH without having to keep the commodity in their possession. Over $8 billion worth of ETH is currently locked in Ethereum 2.0, as we saw in the pulse check. This is up from $2.4 billion at the start of January. Validators received up to 0.25 ETH per month in the last quarter, which is around $570. The new staked ETH trust provides investors with direct exposure to ETH, as well as the opportunity to gain approximately 8% interest on their investment through staking rewards. For a 12-month lockup period, the minimum investment balance is $25,000, with a 12-month lockup period. Products like the Stacked ETH Trust, according to Tim Ogilvie, CEO of Staked, are ahead of the institutional interest that has begun to naturally spill over to Ethereum and Ethereum 2.0 in recent months. Given the institutional interest in Bitcoin, I think a natural next step is to learn how Ethereum works. There are some investors who believe Ethereum's risk-reward ratio is substantially higher than Bitcoin's. In an interview with CoinDesk, Ogilvie said, "Several potential Ether use cases were illustrated in the first quarter. ETH could be used as a speculative investment, used by a non-fungible token, staked on Ethereum 2.0 for interest, or purchased as a corporate balance sheet reserve asset. In the coming months, each of these use cases could emerge as the dominant one for Ethereum and its native token Ether." Price predictions. According to the latest speculative trend and Ethereum's price premium, the altcoin's price might more than double in the next 7 weeks. The price of Ether, ETH, just hit an all-time high of $2,400 on April 14th, and although the price has more than tripled since the beginning of the year, the current speculative premium indicates that there is still a lot of space for development. While the actual price of Ether is about $2,375, the realized price, which is the average price charged by all current Ether investors, is $802. This suggests that new Ether buyers are willing to pay 2.99 times the average price charged for Ether by all current holders. While this may seem to be a high multiple, it reached as high as 6 during the last bull market. The market value of Ether, current Ether price, is divided by the realized value to arrive at this multiple, what all current holders paid on average for their Ether. The MV/RV ratio was created by David Poole and Murad Mahmudov and is referred to as a multiple. It's also known as the market's cost basis multiplied by the asset's cost basis. When the mania got out of control in the past, the MV/RV ratio acted as a good signal, indicating when the multiple reached a value above 4, and when a value below 1 indicated a good buying opportunity. The multiple over the course of Ether's life is depicted in the graph below. Since December 2019, it appears to have followed an upward trend channel. If this pattern continues, we could see a similar MV/RV ratio run-up as in the past by the end of May, and finally as a multiple of 5 by the end of June. Based on the current realized price of $802, this would imply a retail price of $4,010 for Ether, representing a 71% raise. Even better, the realized price is projected to increase over time as more buyers enter the market. It has risen by 15.1% in the last month alone. The realized price could increase by 26.43% to around $1,014 per Ether by the end of May, according to projections. Based on a multiple of 5, this translates to a market price of $5,070 per Ether, a 116% rise. This forecast is a distinct possibility, particularly given the regularity with which Ether and Bitcoin reach new all-time highs. When it comes to price and time goals, there are no guarantees. However, there are odds, and this on-chain predictor suggests that the upside scenario has a much greater chance of succeeding. $5,000 for 1 Ether by the end of May may seem outlandish now, but $2,400 seemed outlandish a year ago when Ether closed at $159. And with that, it's time to end the video. We hope this session was informative. Do let us know in the comment section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos.